Our last OP call is up 2.1%. Out of every chart scanned overnight, Artificial Superintelligence Alliance USD ranked highest. Bias, short. Entry, target, and stop are at the end. Let's earn them with the evidence first. We'll build this in 3 steps: what the chart shows, what smart money is doing, and finally the trade itself. Stay to the end for the levels. Onto the chart, 60 daily bars and 1 story. Price action is in a downtrend of strong strength. That's our primary directional bias right out of the gate. You can see the dotted lines on the chart. Green is our TP at 13.1 cents. Red is our SL at 16.4 cents. Those are the 2 numbers that matter most in this whole video. Now this is the fun part. The pattern detector picked up 1 chart pattern on the daily. Bear flag. I'm going to walk you through each one in the next slides and show you exactly where they formed on the price action. Pay attention to the labeled points. Those are the swings that confirm the pattern is real. 1 second. If charts like this are your thing, subscribe now so tomorrow's scan lands automatically. Pattern number 1, this is the bear flag. It's a bearish formation with 2 out of 3 strength. Flagpole, 15.2%, then tight consolidation. Bearish continuation. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is 15.2%. That's the typical decline once the pattern fully completes. It's a guide, not a guarantee. So we still need our SL in place. Let's talk key levels. Every trade is really a conversation between support and resistance. On this slide, you've got 2 resistance levels above price, 2 support levels below, plus our TP and SL inside that range. If price breaks above R1 cleanly and holds it, that's the green light for the upside scenario. If it cracks below S1 instead, the long thesis is broken and you stand aside. The TP and SL aren't arbitrary numbers. They sit at logical inflection points, which is why this map matters more than any single indicator. On to the indicators. We've got composite score of 0.52, technical plus 0.11. Positive numbers lean bullish, negative numbers lean bearish. And what you're really looking for is agreement across multiple boxes, not just one indicator screaming. ADX is at 31, and that tells us we're in a strong trend regime. Important because some strategies only work when ADX is above 25. On-balance volume is bearish. That's a sneaky good way to spot whether the smart money is buying or selling underneath the price action. Now, here's where it gets interesting. Everything so far is the retail view. The moves that actually pay are the ones institutions position for. So let's bring in the institutional read, ICT, and smart money concepts. On the daily chart, the SMC bias is bearish, with a downtrend market structure. The most recent order block is a bearish zone between 0.18 and 0.19. That's where institutional orders are likely parked. We've also got an unfilled bearish fair value gap between 0.17 and 0.17. Price tends to revisit these imbalances. Most importantly, we just had a BOS bearish move at 0.16, a key structural signal that smart money traders watch closely. Volume profile now, the map of where the real volume sits and where price tends to gravitate. The point of control, the most traded price, is at 0.21. The value area runs from 0.17 on the low side to 0.28 on the high side, meaning 70% of all volume traded inside that zone. The signal here is bearish. Price 0.16 is below value, area low 0.17. Bearish, institutions distributing. POC at 0.21 is resistance. Order flow next. No level 2 here, so we read pressure from closes and volume, a solid proxy. Over the recent window, buying pressure accounts for 33% of volume versus 67% selling. The overall flow signal is bearish. And to round out the indicator suite, 3 more advanced reads. Money Flow Index. The volume-weighted RSI reads 26, signal neutral. Williams percent R is at 94, bullish. Chaikin Money Flow reads 0.20, bearish. Together, these three confirm whether the volume's actually backing the price move or whether it's just speculative noise. Quick context. Over the last 5 sessions, this pair moved 2.74%, and over 20 sessions, 8.95%. That tells you whether momentum is fresh and extendable or stretched and due for a pullback. Zooming out for a second, let's talk macro. On this slide, you've got the primary trend, its strength, the ADX number, and the volatility regime measured as ATR%. Here's the thing. A setup that looks textbook in isolation can totally fail if the broader regime is fighting it. So you want to ask, is this trade swimming with the market current or against it? The 5-day and 20-day moves at the bottom answer that. News and sentiment are mixed right now. No dominant story pulling price one way or the other. When that happens, we just lean on the chart and trust the levels we drew earlier. Quick marker. The payoff is a minute out. If you've made it this far, you'll want tomorrow's scan too. One tap. This slide is why accounts survive. Risk management. On screen, you see the dollar risk per share, the dollar reward per share, and a position sizing table built around the 1% rule. The rule is dead simple. Never risk more than 1% of your total account on a single trade. So if you've got a $10,000 account, you're risking $100 max. And that decides the share count, not your gut feel. Get this right, and you can be wrong 10 times in a row and still be in the game. Get it wrong and one bad trade can take you out. Everything stacked. Now the levels. We're shorting near 15.4 cents. Target sits down at 13.1 cents. Stop loss above at 16.4 cents. Risk to reward 2.10 to 1. That's the asymmetry we want. For every dollar we put at risk, we stand to make 2.10. Horizon, roughly 5D. That's the setup. One more time. This is educational, not financial advice. Markets are risky. Trade your own plan. Never risk what you can't afford to lose. Tomorrow morning, the scan runs again. Subscribe and turn on the bell so you see it first. So zoom out for a second. What we just walked through on FET-USD, that's a short bias setup projecting roughly 14.7% from here. And here's why it matters. Every piece we looked at, the chart structure, the candle confirmation, the indicators, the institutional order blocks, the volume profile, the order flow, they all stack in the same direction. When you see that kind of multi-factor agreement, that's when the highest conviction trades happen. Now, here's what you do next. If this breakdown earned its spot in your feed today, smash the like button. It actually moves the needle on whether YouTube shows you the next one. Comment your watch list ticker and it might be tomorrow's video. Trade safe. See you in the morning. See you in the... And remember, we post every result publicly. Our last OP call is up 2.1%. Same time tomorrow. The scan runs, one chart wins, and you get the full breakdown. Don't leave it to the algorithm. Subscribe and turn on the bell. See you in the morning.